Dear guests, without further ado, let's continue with insightful discussions delivered by industry leaders. Next up, Cash Me If You Can, Evolving Payments, where we will explore the transformation of the payments sector. Please help me welcome on stage the esteemed panelists and moderator Ugne Buraciene, Group CEO at Payabl and Cyprus Country Ambassador at European Women Payments Network. Dear Ugne, dear speakers, the stage is yours.
Hello, everyone. Thank you for coming, and I hope you will have an insightful panel today about the importance of payments and how payments are evolving today and for the future. Before we dwell into all of the questions, I would like to make short introductions for everyone so that we know where and who is sitting and your experience in the payment side, please.
Just to start quickly, my name is Vahid. Nice to meet everybody. It's a pleasure to be here. I work with EcomBX, part of the team that is handling new product development, platform enhancement, maintenance, corporate banking and partners, and marketing.
And good morning, everyone. Okay, now it's working. So good morning, everyone. My name is Filippo Luca, and I work in sales for PayU. For the ones that don't know this company, PayU is a global payment solution provider. We got a global gateway, and we focus on emerging countries. Specifically, we focus on Eastern Europe, Africa, and Latin America.
I'm Tony Craddock. I'm the Director General and founder of the Payments Association, and we are a trade body that represents the interests of organizations dedicated to achieving the great things that the payments industry can do. 200 companies in the UK, about 100 across Europe, and it's a pleasure and privilege to be here.
Thank you, everybody. My name is Ran Yehud. I am from Nuvei. I am SVP Commercial, in charge of all the sales and relationship at the organization. I've been with Nuvei for over a decade, and happy to be here with you. Thank you very much.
So my introduction was already made. I'm Ugne Buraciene. I lead a Payabl group of companies. We're a pay tech provider combining all aspects of payments from banking to traditional processing. And let's delve in right into the questions for today because we don't have a lot of time. The payments are changing and have been changing for the last years, and there's a lot of new trends and new technologies involved in the payment space, including AI, including crypto, and there's a huge shift between what was traditionally known as regular payment methods and what the payments are now. So let's talk a little bit maybe about what you see as the trends that happened in the last 5 years in the payment space, and specifically maybe you see some specific trends in the Forex space and acceptance of payments in the Forex industry as well. Anyone who likes to take the first question, feel free.
Yeah, I don't mind. So many things have happened. As someone which is in the industry for a long time, I have seen many things coming across. So for me, it's about diversity. We cannot no longer rely on just the regular scheme. So we're speaking about global reach. We're speaking about different alternative payment method. Payment pay with crypto. That's another option, and those things. But many other things has happened. Like imagine where were we before the PSD2? We imagine where were we before the 3D adaptation, okay? The two-factor authentication and other things that brought our life to become more, let's say, for the user to become more secured and that they will feel more comfortable. 10 years ago, 5 years ago, still people hesitate to actually deposit with the online. They were doing things like they used to be, like in the past. And nowadays, it's like very common. Everything is been done from the laptop, from the device, from sometimes with a foot screen or face screen, and as such. So many things has happened. There are many other things, but I will let my other colleagues speak about them. So thank you.
So let me jump in quickly. So look, I think to me it's a set of contrasts that I've seen in the last 5 years. So the contrast between the people who have access to some of the products and services you're talking about, instant, convenient, accessible, on the one hand, and then the many people who don't. And remember, the 7 billion people around the world this industry ultimately serves. So that to me is one observation. I've also seen a tension continue between innovation and regulation. Regulation always follows innovation, but the consequences of that recently has been that it hasn't quite been working, and I think what's going to be interesting in the next 5 years is how we can make it work better on issues around some of the problems around this industry to do with money laundering and fraud in particular, two areas of great concern to our members. And I think in terms of the FX, I think it's a changing nature of the role of the broker and how they themselves have to deploy and use new technologies to better serve their own clients, because if they're not careful, they'll be disintermediated. They'll be taken out of the need in the value chain for the movement of money. So that's a big opportunity, but also a big challenge for brokers going forward.
Filippo, would you like to add?
Yeah, I wanted to call out a couple of things. Like, so what my fellow panelists said is absolutely true. And if we think of, in terms of 5 years, the 5 years time span, that's an eternity in payments. I want to call out specifically a statistic. In 2019, so 5 years ago, there were just 39 unicorns in the fintech space. Now we got 350, according to the last observation. And that is just a consequence of, I would say, a massive growth of this sector, especially in all the countries where there's still a transition from cash to online payments. And that's also why I think we're talking about evolving payments, and that's also why I was invited, and I was invited because we're responsible for emerging countries. Because that's actually where there's still this ongoing shift that in, I would say in Europe, in the United States, it's already quite mature, from cash to online payments.
The only thing I would add here just briefly is that although the shift in device first enabled payments online and all this, is very much tied to it's a generational shift. So younger generations are more embracive and more quick to adapt to this change, and not only adapt, but demanding and expected. So at the same time, it's true for FX or retailers or the whole market participants, this technological embrace of enabling this type of payment in the digital first world is an extensive requirement that requires, as correctly said, internal investments in technology, adaptations to new regulations, and all of that. From an EMI perspective, where we cater to a lot of these industries, as well as Forex and other related, one of the key increasing demands that we see is, as correctly said, global reach. That requires cross-border payment requirements. It requires a provider that caters to these merchants, both on the side of acquiring and on the side of banking, to have a reach in many currencies across the world, because the demographics are decreasing, they are unifying. It requires accounts, it requires real-time rates, it requires the payment gateway that's being provided to be able to accommodate all these payment types, you know, open banking, Apple Pay, the tokenization, payment methods, and all that. So, yeah.
I think we touched a lot of subjects already, and then just one of those answers. And I think just to sum it up and to move on swiftly to another question. So the landscape is changing. There's a lot of players also that are driving that change, whether it's geographical demands, whether it's also user demands. And I think the biggest also challenge is the demand from the user perspective. So we're talking about the fact that the users now are in for seamless, fast, cross-border, lower transactional cost, payments, which leads us to a question: how do you see that from the perspective of your organizations? This challenge and this drive for simplified, seamless payments, and the ever-evolving demand from the end consumer. So, how do you help your clients, and what do you see, and what do you do as an organization?
Yeah. So, our organization is actually looking into everything. We are a company that actually attracts and get clients from all over the world. So global reach is a key, but global reach is just a word. We are making sure that there will be things behind it, that there will be different solutions, that if we have certain integration, that we will make sure that this integration will be advanced all the time and not behind, because there is always changes going on. There is always something else going on. Some market will go by QR code, some market will go by wire transfer, some market will go by similar to SEPA open banking, and we are making sure to be there. In fact, we have like 5 to 10 different alternative payment methods every quarter that we are getting. And in my perspective, it's about giving accessibility, giving effectiveness, giving proficiency, and making sure that there will be the effectiveness for the merchant while making sure that we are being flexible for them. Being flexible, it's a must over here because not every company is similar to the other. We're working with various industries, but even in this industry, there are so many different other things, okay? There are CFDs, and there are people that are dealing with, I don't know, maybe loan and insurance and crypto-related, etc. Each one have its own needs, and that's how we are targeting it.
Sure.
And yeah, I'm struggling a little bit with the mic. I'm not used to the mic. Yeah, this is really interesting, and I think it's interesting to see that different providers have different approaches. At PayU, what we do to help our customers, we basically typically propose like a cross-border, I would say, system, and we also propose like a local model, meaning that we have a number of countries, Latin America, Africa, Eastern Europe, where we have local offices, local capabilities, local people, local experts that I think are probably the biggest asset that we have. But again, it really depends on the customer. There are some Forex traders that prefer to go like an approach, like a multi-country approach, and they don't want to focus on specific countries, while there are some others that really want to go regional, so they're like, okay, let's talk about LATAM, from Mexico all the way to Argentina. And then we got the possibility to offer a specific platform with specific capabilities, or like a global gateway that connects seamlessly all the platforms and the sub-platforms that we have. And again, what Ran said is absolutely crucial. Constantly innovate, constantly add the local payment methods. Because like by working in emerging countries, you see that they are so different in terms of needs. Like Mexico, for example, is the land of cash alternative payment methods, the likes of Oxxos Pay, 7-Eleven, the Farmacias. Argentina is also quite big in cash, while Brazil is dominated by Pix, this amazing account-to-account product. That, like a segue to the first question, 5 years ago, Pix was announced, but it was implemented and made fully operational just in the end of 2020, so less than 4 years ago. And now, yeah, if you want to go to Brazil without Pix, yeah, it doesn't make any sense.
The comment I wanted to make here is, yeah, I agree completely. I just wanted to touch upon the term flexibility. In order for any provider that caters to this type of exceptionally or crazily developing industry, flexibility is and time to market is crucial. And the way that we are positioning ourselves to be able to accommodate this is the way we are setting up our infrastructure, the way that our systems are connected, the communication methods that they are all working with APIs, the fact that we are exposing our key products through our APIs for them to be utilized by products. And we do have a few examples where FX, retailers, shipping, other companies are trying to use these new developed tools like through PSD2 to basically integrate their own internal systems through the platform that we provide and be able to, for example, initiate payments from the accounting software straight away, or access account information straight from our API to their system for reconciliation. And yeah, that's it.
So I'd like to add something a bit controversial.
We like controversial.
I'm not sure whether there's a kind of a remorseless shift towards increasingly instant, increasingly low cost, totally convenient, ultimately very flexible payments that everybody wants. That's what most consumers want, or most businesses want. They want something that's countable, that they can see, that's secure and safe. The difficulty is that the technology has gone so far that it does enable those things, but it doesn't do it in a way that's totally secure and systemically resilient. And that's why the regulators have come in with DORA, they've come in with PSD3, they've come up with AML 6 or 7 or whatever these things coming down the line. So I think we're going to see an increasing shift towards payments needing to become slower and adding more friction and becoming more expensive, which is counterintuitive. You'd think our industry was going to become, to the extent that our dream is that payments is totally invisible, that I just do business with people and the money just flows. The Amazon Fresh example, I go into the shop, I come out with my bag of groceries and everything's instantly paid. That in itself is a challenging model, but I think increasingly we're going to have to expect to have within our businesses, systems, products and processes more friction, more compliance, more reporting.
I completely agree with you, Tony, and I think in some cases those particular payment methods do require that. But there is definitely a shift in terms of instant payments, and we see that also from payable side. But I think also what is very important is that you look at the checkout experience also for the user, because we talk about a lot about the fact that okay, we're gonna offer them a lot of payment options, regional, local, and all of this kind of stuff, right? But ultimately you're servicing the end user of the business, right? So they have to be offered very tailored solutions that do meet all of their requirements, and also overloading with a lot of alternative payment methods or making it impossible for them to choose actually is a killer for conversion.
Too much choice is a disaster.
Too much choice is not good, right? So too much choice is not good, and also that choice is also determined between the business itself and also the convenience for the end consumers. I think this is really the hard balance, to manage, and I completely agree, Tony, that in certain cases, certain payment methods, that are evolving and that are becoming more popular, they need more regulation in order to to reach the adoption that they require. And we kind of segueing again into our other question is that we touched upon AI, we touched about new payment options, open banking, and all of the new things that are happening in payment space. We are having challenges in the adoption of those. Including open banking, including crypto. How do you see these challenges for the future, and whether regulation can help that, and how regulation also can help in the future as well?
I can quickly answer to this one, because the answer is it's complicated, because the problem is that the thing that actually strikes me the most about it is the approach of different regions to regulations. They say that the United States innovates, China copies, and Europe regulates. I think there's a kernel of truth on that, because in Europe we got regulations upon regulations upon regulations, which is absolutely fine, but that doesn't help, to have like I would say a global approach to this kind of innovation. So. Honestly, it's not easy. That we're making steps forward. Of course, the word from a fintech standpoint, from like an innovation in fintech standpoint, I think it's a much better word than it used to be a few years ago. But again, honestly, it's not going to be easy. Just because it's about putting together like a lot of decision makers that have a different approach to the problem.
Can I add my thoughts on this are, it's partly about how you name things. Let me explain what I mean. So in 2014, I went to the Bitcoin Foundation conference in Amsterdam, 1,400 people, all passionate enthusiasts about the potential for decentralized finance, for making the world a better place. We then had a whole wave of innovations around crypto. Who has used the word crypto in the last 6 months? It's just not used. What's used is digital currencies, programmable money, stable coins, maybe CBDCs. So we've changed how we name these things. The stuff that you're hearing about AI now, 3 years' time we won't use the word AI. It just will be part of business as usual. So part of the secret with this stuff is actually knowing when you're on the crest of a wave, knowing that to recognize what that wave is, and surfing it, and when the wave breaks, go on to the next one. That's the secret.
I love how you mentioned that, because it's actually it's the buzzwords, right? So all of the time we have these buzzwords that that surround the industry, but when you actually really dig deep, what does that mean, and what is AI? Whereas in payments industry, and also the same in payable, we've been using machine learning for our fraud prevention, all this kind of things, right? So it's some of these are not new. They are old, and they're just evolving as we go along. And also open banking is one of the sort of good examples as well, where the adoption of it was very fast. But there's challenges also in terms of how it is, how the consumers are consuming the product itself, right? There's challenges in terms of if we talk about just, PIS and AIS, based, payment solutions, it still poses challenges. So even if something is, released and there's a lot of, buzz, around it, there still needs to go through all of the maturing stages in terms of making that adoption and the payment, really usable. And I think, as you mentioned, crypto, whether it's stable coins, whatever it is, needs to go through the same wavelength and to mature into a real feasible, whether it's a payment option or whether it's another, form of it.
Yeah, and a year ago, like open banking, everybody thought, yes, we're going to replace, no more Scheme, no more Visa, no more MasterCard, and we have open banking. I think, in order for that to be widespread, and looking at Generation Z and also other consumers, they care about their safety, they care about their security. They are very, happy to share their details, but they care about everything surrounding that. And until they will not feel that open banking is well set with two-factor authentication and everything else, I think it will take some more time for that to be spread across everything. And I think it was too soon to put to bed the cards and everything. So that will stay around. They're also evolving and changing themselves to adapt. And same as my colleague said over here, cryptocurrencies, it's a big word, okay? There is much things happening over there, but big companies need to understand that they need to address that for a certain market. In fact, we already see that for some markets, cryptocurrency become more relevant. For some others, it will take a lot more time. And these are the type of things that we need to, these are the challenges that we're always dealing with, and we're making sure that we are adapting to that.
And also, as all licensed, financial institutions, security is the most important aspect for payments, right? So making sure that it is secure for the end consumer should be the main objective of that, right? Because you cannot offer something that is not secure for the end consumer because that damages both you and the business itself. And in the case of open banking or payment initiation, the issue is that there is still no framework for refunds. There's many things. Fraud is another aspect of it. So if you compare, I think unfairly, card-based product, which has been, in the industry for many, many years, very mature with all of the relevant security and dispute, processes in place. It's kind of, you can see how long it will take, for the others, to really reach, that stage and to be offered as a really mature, product. And even with cryptocurrencies, if you take it just as a regular payment option on its own, the adoption of it is not very wide. Right? There is certain segments, there's certain, specific, type of merchants that, also are adopting it, but it's not mainstream. So open banking, however, had the notion that it might be, replacing something, and I think it's just not there, and we still have a lot of steps, to go, and I think, Tony, you have for sure something to add to that.
Well, I mean, the fundamental flaw in the design of the UK, I can reference the UK because it's a market I know well. Interestingly, of course, PIX, which is what, 60%, 70% penetration in Brazil, is essentially it's bank-to-bank payments. And what we're going to hear, people won't use open banking in a couple of years' time. They'll just refer to it as account-to-account.
Exactly.
It'll either be scheme, cards, or account-to-account. And whoever would have said that account-to-account payment should have no commercial model underpinning it, and whoever said there should be no dispute resolution built into the framework. They're completely obviously missing, but nobody kind of, or for whatever reason, they decided not to design those things alongside the technical standards that is what was the open banking implementation entity a few years ago. So it's extraordinary how the regulators, you've got to be really careful as a regulator that you don't try and be the innovator. You must just be a really good regulator. And so often, when countries bring in regulations to substitute for flaws in what they see as the innovation, there's a disaster. And I think open banking's lack of market adoption across Europe, actually, but particularly in the UK, is partly because they tried to be innovative rather than regulation.
I would like to add something real quick to open banking because this is an extremely interesting topic. But it's, as Tony says, it's complicated also because of other two factors. One is the standardization of APIs. Basically, every kind of payment that goes at account to account, it's basically a conversation between two banks. that happens through an API. But API are not standardized. Even banks like belonging to the same country might use different kind of APIs. They might use different kind of protocols. So imagine when the conversation, the payment, the account-to-account payment happens to two banks that are in two different countries or even in two different regions. That's actually something that we're all going to work on together. And apparently, also, a lot of people still do not understand open banking. Even though in countries like the UK is at the forefront of open banking in Europe, and yeah, like payment methods like Ideal in the Netherlands, where I live, or Pix in Brazil, they have a massive market share. But still in other countries, the penetration is not that big. And another thing that actually, I read an interesting article that was saying that open banking is ideal for merchants, but there are still some concerns about users. Because, for example, we were talking about disputes resolution. If, for example, tomorrow I transfer money to a scammer, then there's no way to charge back an open banking payment. And that's also something that I think is going to be a concern for individuals.
No, I think it is a concern, and it is being tackled in any case. And I mean, not having a dispute process, this is something that is really challenging for the end consumer, no matter how we look at it. And also from Pix perspective, it is an account-to-account payment, and also I think there's a lot of confusion when you say about open banking, because open banking is a concept on its own, right? The use cases for it is astronomical. So actually, most cases, the end user will not even know what the use cases for the open banking are. So, but the most predominant one is the payment initiation service. So that's why for users, there's the most let's say confusing when you call two things separately, and then there's So and we but anyway, moving forward, moving away a little bit from open banking, let's delve a little bit into security and fraud. So it is projected that up to 2027, the loss for merchants in terms of fraud will be 350 billion in euros, right? That's a huge number. So in the digital-first world, fraud is really ever growing. And what does the industry what do you think the industry should do to tackle this and to prevent, such huge, losses in the future for all chain and specifically merchants as well? Maybe Tony, you can start us off on that.
So let me share a little bit of perspective from both Australia and the UK, and two different approaches to essentially stopping the holes in the bucket. The holes in the bucket at the moment, about 50% of fraud is through the card schemes, and 50% of payments-related fraud is through bank-to-bank payments. And interestingly, they're kind of not growing hugely, but they're still a big problem. And so two ways in which you can solve it. You either do what the Australians have done, which is essentially try and shut the holes in the bucket. You plug the holes in the bucket. Logically, if you get everybody involved with the payment ecosystem, from the merchants, where the transactions are initiated, through to the banks where the payments are processed, then you can actually find a common set of solutions. And they've set up institutions in Australia to do that. And the figures are astounding as to what they've actually achieved. The authorized push payment bank-to-bank scam figure for investment-related scams in Australia is about 50% of all scams. In the last 8 months, following this new institution's approach to filling the holes in the bucket, has reduced fraud by 38%. 38% in 8 months, phenomenal figure. In the UK, they've had a different approach. What they've said is, let's mop up the water on the floor once the water's come out of the bucket, which is essentially guaranteeing that you'll reimburse anybody who's scammed, and 90% of all people who have got a bank-to-bank payment from October the 7th will be able to claim that there was a scam, and 90% of them will get their money back. And if you then claim that you're a vulnerable person because you're stressed or you're unemployed or you've had a bad day at work, you can claim to be vulnerable, and that'll close the other 10%. So essentially it's a money-back guaranteed fraud scheme. The UK system is hoping that the amount of pain, the regulator said this to me, the amount of pain that the industry will have, the payments industry will have from mopping up the water on the floor after the holes in the bucket, will force the industry to plug the holes in the bucket. It's two very different approaches, and I think it's fascinating. Who knows? The Australian one's working. I'm skeptical about the UK ones, but there may be some other views.
On this part, also this is where regulation comes into play. So regulations, for example, recently we had, I think, the launch of CISO for tax, the reporting requirement for beneficiary spending, which is basically where you're sending to each member state that you have activity to the payment information of the beneficiary receiving it. So the point here is that for Masters as well, the more that you are involved within the payment cycle, the supply chain of the payment facilitation, the better you know your customer, the more that you transfer that information across the supply chain, the more anti-fraud and compliance and resilience to this thing, to this process you will be.
Yeah, I think, you know, if you will ask a merchant, any merchant, okay, in particular broker merchant, what are the most important things for him? So you probably will say first pricing, but that's not the most important thing. If he's wiser, we say the approval ratio, okay? But when we're speaking about the approval ratio, on the other side, we have the chargeback, we have the fraud, we have all the other bad things that comes with very high approval ratio. So some, I would say some, you know, some payment providers, specific ones, or even, you know, tend to close the country or close the area or put some very big restrictions whatsoever. So then the play with the approval ratio and the decline goes up and down. I think the struggle and the effort that needs to be done and is being done by all the PSPs is how we can actually keep the approval ratio as high as possible and at the same time reduce the fraud ratio, reduce the chargeback ratio, anticipate by generating AI the fraud before it comes to reality, anticipate, you know, the chargeback before they come to reality, and all these other methods and elements that are being done in order to keep the approval ratio still as high as possible, because the easiest things is to make sure that there will be like no chargeback, no fraud, is not to process or to have a very small ratio. But that's the struggle. And whoever does that successfully, and by the way, there needs to be a lot of investment in AI. There needs to be a lot of investment on the risk department. There needs to be a lot of investment on all these other surrounding departments in order to make sure we're being successful, and that will make the client happier and more successful at the end.
So I think the way that we see it at Payable is that that all of the parties should do their work in this case, right? The regulators should do their job. Us, you know, as innovative, you know, payment, you know, provider should do our job. And exactly what Ran said, you know, we should make sure that, you know, that we have fraud, you know, management, you know, systems in place and all of that. But this is great if you do that. If the other participants in the whole ecosystem will not do the job, right? Because ultimately, and I completely agree, you know, from clients, you know, perspective and from merchant perspective, what they want to see, they want to be able to enable a payment method and process with it and not incur, you know, losses. So the challenge is how do you balance those, and also how do you not discriminate against one payment method towards the other, right? Because it's you know, a high fraud rate, and I see that as a potential also challenge for the future of certain, you know, payment options where that will not be managed, and therefore it will not be or it will not continue, you know, to be a mainstream, you know, payment option. Because ultimately, the job is to make sure that, you know, that we don't incur, you know, those losses ultimately as the whole, you know, ecosystem. So also, you know, we're talking about regulation. We touched a little bit upon it. So we're talking about the fact that, you know, we have to innovate, we have to, you know, launch new payment options, you know, do all of the things, you know, that the consumers want to see. Where do you think the regulation stifles that, and what is the balance, and how to keep that balance between regulation and the need, you know, for innovation in our industry? Tony, would you like to start?
So I think the trouble is that the people that we need to talk to are not in the room here, Ugne.
I agree.
So the people who ultimately determine the regulations are not the regulators. They're not given a mandate. They are given a mandate by the politicians. And so in every country, whether it's in every market, so the EU, this is why influencing the political dynamics in the EU and in the UK and in any local market is really important. The reason PIX happened is because there was a political will to make it happen. So while this is uncomfortable for people in this room who perhaps are technology champions or product champions or innovators or purely entrepreneurial people, such as the people on the panel, I think we still need to get the ear of the politicians so that they can get their regulators to have the right balance between consumer protection, innovation, and regulation. If you get it out of balance, then one of the other two really suffer. Either innovation, that's the people in this room, or the consumers, because they either don't have the choice or they don't have the security.
I wanted to comment on that, actually. So one of the ways to solve the equation described by Ran about the need to protect from fraud, but also the need to protect acceptance, because that's what ultimately every merchant wants. One of the ways, there are really good technologies that allow to identify digital identities, to verify digital identities, by the use of artificial intelligence and machine learning. These are solutions that are typically designed and developed in the United States, that in the end is still the hub of artificial intelligence in this world. But they typically then have to deal with regulations, like, for example, GDPR in Europe. So that's a good example where we need a compromise between innovation, high technology, and regulations. Because then you might have something that could be the solution for that equation, but then there might be a regulator that stops it.
Yeah, completely agree with you. Also, let's move into our next topic, which I really like. And we all know that there's traditional banking, and then there's fintechs and paytechs. And in the recent years, the interchangeability and the involvement, let's see, between the two has really grown. And we have still the onset of the traditional banking, which remains as a sort of the cornerstone of all of the things. But there are many disruptors, fintechs, and paytechs, like ourselves as well, here on the stage that are making a move, and we're seeing a lot of interesting collaborations and partnerships come out of it. How do you see this collaboration between the traditional banking and the fintech, and how one can complement the other? Please.
I can start answering to this one because I think it's a great example of co-opetition, meaning that there is competition, but there's also cooperation. And I think it's also because traditional banks and fintech, even though they are at the opposite sides of the industry, they still need one another. Like the traditional bank is financially stable, they have the trust, they have the customers, they have the agreements with the schemes, while the fintech is actually what brings everyone forward. It's the disruption and it's the improvement of the life of users, of customers.
It's the speed.
Yeah, absolutely.
That the banks don't have.
For example, just something that absolutely everyone is absolutely familiar with, like a bank app. Like everyone in this, I'm sure that everyone in this room, whenever they need to perform any kind of operation with a bank, use an app. But that's basically fintech, because they use it to be something like that. Like my first memory of a bank was a lot of years ago when I was a little kid in Milan. My mother brought me to the bank because she needed to do something. And then she put me somewhere, she set me somewhere with a piece of paper scribbling something. And then I was like, what is this place? It's so big, it's so quiet. While now, the same story, like a young mother with a little kid, she would just perform the operation with an app from the couch of her place. So I think the two systems are absolutely interdependent. And again, there are also some examples of traditional banks that actually kind of spawn a fintech. For example, Société Générale in France with Trésor, or Banca Sella in Italy with Axerve. So yeah, I think the two worlds are absolutely interdependent.
I also agree that I would say more cooperation and mutual involvement, because the one thing that, as the example you said when you were younger, when fintechs are geared towards getting customers now, they're more customer oriented, they're more customer facing, they have speedier execution, speedier responses, they have a more direct integration, cooperation or relation with the customer, where traditional banks, not that they don't try, as you provided good examples, but they're not to the same extent. So, but at the same time, you need traditional banks to facilitate payments. Regardless where you are in the payment scheme, it would end up as them being the end facilitators, them providing the 24/7 service settlement in certain currencies. So it's all a matter of putting cooperation in front of achieving the same goal?
I think there's a delicious tension between the culture of a bank and bankers and the culture in a fintech.
Oh, yeah.
And so, you think about the bankers. Most of them have been there for many years. They're expecting to retire there. They are secure. They would love to be having the adventurous life and the risky life of a fintech. But unfortunately, 90% of their IT budget is spent on compliance, which is the result of the UK survey. So they've got their hands tied behind their back. So they've got to flirt with, and they've got to play with and work with, because you're right, fintechs have brought mobile banking to the world that we know. It wasn't the banks that did that, it was the fintechs that did it. So and there's this. So I think we've just got to continue. I think it's healthy, the tension, and I think it works very well.
And sorry, I will just also add to the point what you mentioned, that that the fintechs brought it. I think it's also as we discussed, that it's digital, first world. So we're talking about the fact, that the consumers are also demanding that, and of course the banks are in no way or speedy enough, or as you mentioned, have enough resources to even mandate or offer the solutions otherwise. So they had to rely on one another, and I think I like what you mentioned about this, healthy tension. I think there is still that, also to do with the fact that that there is seen as a competition in between. But I think more and more it evolves, and the relationship between the fintech and the traditional banks evolves. I think it's seen more as another revenue stream for them, hopefully. Even though that that the risk and compliance part still is very imminent, and there's a lot of work and work to do in terms of the confidence between this relationship. And I think this is what we're going to see in the future. Brian, sorry, go ahead.
Yeah, of course. I think, if we take a look back, the traditional financial banks were somehow threatened by all this fintech world. And now more than that, not only that they build those apps that make things more accessible, and that's fintech, and they needed to do that in order to be kept into the race. But the fragile, or let's say the delicious tension that they have between themselves, even caused to some acquisition, okay? Look at some acquisition that some banks all over the world has been done for specific payment methods or for specific ways of facilitating money. So that's part of their investment, that's part of what they're thinking, and they always think how to get more involved. Look at the other banks that came along. There are banks that now are with no branches, okay? Everything is online. So that's also fintech in a sense, even though there is a lot of compliance and AML and everything surrounding that, that's only. So it's like making sure that we are adjusting, making sure that we are collaborating and not fighting with each other, because that will not bring into a good situation.
Right, so we're almost all out of time, so let's do something different. So you have literally 30 seconds each to give an advice to merchants in the audience if they want to accept payments. Go for it.
If they want to?
Accept payments. What is your advice? If they want to go and process globally and secure, what would be your advice? 30 seconds.
Work with payabl.
Thank you so much. That's less than 30 seconds, so I'm done.
I would say be open and make sure to consult a lot of different experts. Even if you really trust a provider, keep talking to the others. And I'll say that against myself and against, but again, it's like we're a little bit like doctors. So if a doctor tells you that you have to undergo specific treatment, you can trust the doctor, but also talk to other doctors. Make sure to have backups anytime, because you never know what can happen. And I would say make sure to constantly keep an eye on the news and know what is happening.
I would say also from my perspective, just don't leave payments as an afterthought. I think a lot of businesses do that still. To my biggest surprise, without the payments aspect, there is no way to close the loop in terms of what you're selling in any case. So you have to invest into the product itself. You have to analyze what your consumers want. Have a trusted payment partner. Have many trusted payment partners to make sure that you cover all of your needs, and be cautious of the security and regulatory issues across where you operate. I think this is the kind of, to sum up also nicely to what we discussed. And thank you so much, guys, for having a great panel discussion.